everyone's favorite subject, right? Yeah, IRS. Okay. All right, so if you liked 2018, you're in luck. 2019 is very much the same. If you didn't like 2018, I'm sorry. There were lower rates. The number one thing that the Tax Cut and Jobs Act did is that it lowered all the rates. So everyone did have a lower tax rate. However, some of the itemized deductions that were part of the taxation equation were removed. So that, in some cases, kind of negated the rate cut. All the things that I'm going to talk about here, we're going to go into more detail during the presentation, so I'm just going to highlight them, and then we'll talk about it in more detail later. The standard deduction was also increased. It was doubled, but they took away the exemptions that you used to be able to get and add with the standard deduction. So it was good news and some not so good news. The biggest, besides the lowering of the rates, the other item that was just the biggest change and the biggest benefit to businesses was referred to as 199A, and it's a 20% deduction that you take against business income. Again, like everything in the IRS, it's not all businesses get it to the same extent. So it is something that we are very excited to share with our clients, and that we ask you to, let us talk to you about individually how it works for your particular business. The law also increased the extent to which you could write off capitalized assets when you buy business equipment. Much of it can be depreciated faster, which is a good thing for the current year that you're in. And the law also really ramped up the estate tax exemption. It made it much higher. Gary will go into that in more detail. A few other things that actually one thing that's new this year is the penalty that you used to have to pay if you did not have health care insurance. That is gone off your individual tax return. If you purchased insurance off the marketplace, from a Nevada marketplace, you do still need to bring in that information when you do your tax return, because we need it to calculate whether you receive too much of a credit or not enough. And cryptocurrency, does anyone invest in that? No? Okay, I won't belabor it then, since we don't have a big crypto crowd. No, actually, if you purchase cryptocurrency, it's considered it's a currency, like you can use it to buy things, but it's not considered cash by the IRS because it's not backed by a sovereign government. It just kind of exists on the internet, so to speak, or in the cyberspace. So if you go to sell it, it's considered a capital asset, and you do have to report it if you buy and sell it. The bottom line with it, you guys don't own it, so it's probably not too much of a concern to you, but the IRS is cracking down on enforcement, and they sent out a letter to 10,000 taxpayers over the summer that says, hey, we think that you invest in this, that you may have sold this, and you need to report it because Uncle Sam likes his money and he thinks he wants his share. This slide just has some reminders about due dates. Taxes are due for businesses on March 15th, and that date comes up quick. Yeah, we're already middle of January. So there is an extension, and you can extend business tax returns until September 15th. Individual tax returns, everyone knows, are due April 15th, but that you can extend them until October 15th. But, as always, there is a big caveat. It is only an extension to file, not to pay. So if you owe, or if you think you owe, we should sit down and talk about that before April 15th so that we can help you make sure that you're paid in. We don't want to get to October 15th and go, oh, by the way. That's usually not a good thing. This is also a really great time of year to review your withholdings for 2020. If you receive W-2 income or retirement income, we want to make sure that you have enough paid in throughout the year, so again, we don't get to the end of the year and have a big surprise. Also, if you have business income, maybe not withholding, but if you're paying estimated payments throughout the year, we want to take a look at that too and make sure that you're paying in the proper amounts, again, so that we don't have any surprises. So we should have a planning meeting sooner rather than later for these items. And there were some provisions that expired. These have been expired for a little while, but it's still good to talk about them because we don't always realize it. One of the ones that many people were affected by is the exclusion for canceled mortgage debt. During the recession, we had a large number of clients who unfortunately were not able to meet their mortgage obligations and who defaulted. That would have been considered income to them. However, there was a provision in the tax law that forgave it. That provision has expired. So if you're in that situation, or if you encounter that situation currently, you would have to pick up that retired mortgage debt, that forgiven mortgage debt, as income. And that's something that it might be important to know. A mortgage insurance premium deductibility, that is no longer deductible. There used to be an above-the-line deduction for tuition. There also was one for moving expenses. That has gone away too with the Tax Cut and Jobs Acts. And there were some energy credits. Alimony. Alimony is another one that has gone away. Alimony used to be taxable to the person receiving and deductible by the person paying. However, unless your divorce was finalized by December 31st, 2018, that is no longer the case. So if you're married, you might, maybe you'll stay married. There might not be an incentive on that. And I'm going to pivot for just a minute to the topic of fraud. Fraud is something that, unfortunately, we're dealing with all the time, cyber fraud. If you're in business and you accept sensitive information from clients, you really need to be thinking about cyber fraud and talking to your IT professionals about how to protect yourself in your business. I would highly recommend thinking about some type of insurance, possibly purchasing some type of insurance against cyber fraud, as it's not something that people talk about too much, but it does affect a wide variety of businesses, small businesses not being exempt. There's a lot of bad guys out there, unfortunately. You do want to do things like secure your network, make sure that your people who can access it are trained and that it's restricted, and just this is something that you should look at regularly. I would say once a year at least with your IT professional, because these things change so often. On the individual side, you really also want to protect yourself, things like shredding your mail, checking your credit report. There is a government agency there's a website called identityfraud.com, and it has some information that could be helpful on this topic. The IRS never will call you. If you get a phone call that says, "Hi, this is the IRS," "Hi, this is the Social Security Administration," it's not them. It's bad guys. And hang up the phone. They want your information. They're trying to rip you off. If somebody says, "Guess what? You inherited $1 million. I just need $10,000 finder's fee or for fees or whatever," that's fraud too. Just hang up the phone.